Hi, my name is Jeremy Miller. I'm with AppealTaxes-Now. I've been asked to go through the appeal process with you so you understand what a property tax appeal is, tax value and the tax bills, and how that all relates to you and your business, whether you have 1 or 100 or 1,000 properties. So I'm going to do that, but before I get into that, for those of you that don't know me, let me give you a little bit about my background so you can understand where I'm coming from when I tell you what I'm getting ready to tell you. So I'm a level 3 assessor, state certified with the DLGF to be a state tax rep for you, the taxpayer. I don't work for the county, I work for the taxpayer. So what we do is we go and we file appeals for our clients, negotiate with the assessors for the county, and we get those values lowered. Why the values getting lowered is important to you is because your tax payments are based upon the value of the property. The state went through a big to-do a while back and we gave market value in use and market value laws for real estate. And a homeowner that lives in a property with a homestead is taxed at a 1% cap, whereas all of you in here that have real estate investments, you're taxed at a 2% tax cap. And if you, this is for single family and duplexes and triplex. If you have a 4 or more in commercial, it's a 3% tax cap. So it's important for you to understand the taxes that are assessed on your property, because Uncle Sam, well, in this case, Uncle Leroy, the county, is actually almost your partner in your properties because of the amount of taxes they are compared to what you're getting in rents. So another example is this. If you're going to sell a property, the lower your tax payments are actually makes your property worth more. I know that sounds contradictory, but it is, because now they pay less in taxes and they could pay more for your house. Or if you've got an income property and you're paying less in property taxes, your ROI increases, because now how do you increase your ROI? Either you cut expenses or you get more rent. Well, cutting your property taxes down is cutting your expenses, because those are part of your expenses. So you can actually increase the ROI of your property by decreasing your property tax values, and that's what we're here to do. Myself and my partner, we both own properties. I have a portfolio of a little over 30 properties, and my partner, he's the largest single non-fund property owner in the state, now has over 900 properties. So we understand the process. We understand from A to Z in this business. We've been in it for well over 20 and 30 years, me 20. And so this is a big deal. We started this company, the appeals company, because we knew it was an issue. We were tired of paying taxes, and once we did this, we went and got licensed, and here we are. So Marion County and some of the other counties' tax bills are coming out soon. And when those come out, they trigger a 45-day window. Now there's also another thing that triggers the 45-day window that a lot of people don't know about. It's a Form 11. That form alone triggers the window, and that is the new notice that your valuation is. Usually that comes out because your value went up, but some counties are even sending it to people that don't go up. And once that goes out, that's your notice, and you have 45 days from that window. And that notice may go out months and months and months before your tax bill does. And then when your tax bill comes out, you have no right, no standing to appeal. It's crazy, I know, but it's just it's kind of a little tricky game that's played. I think it's played, but you know, it's their right to do that, and that's what they do. So you have to play within the rules as well. And if you don't know the rules, then what happens is, if you don't file an appeal on a property that the value is higher than it should be, then you lose your right to file. And what you're saying then, by not filing, is, I agree with you, Mr. or Mrs. Assessor, and we're just going to pay the bill. And you do, and that's what happens. If you want to file because your property taxes are too high, that's not the reason to file. The reason to file is because your tax value is too high. You cannot fight your tax payments, you fight your tax value, and that affects your tax payments. So keep that in mind as well. A lot of you that have a mortgage don't even know what you're paying in taxes because it's going through your mortgage and through your bill. So you're losing out because you may still be overpaying, but because it's happening over a time period in your mortgage, you don't think anything about it. But you need to think about it, and it's important if you want to make money in this business and cut expenses where you can. Now, if your value is in line, you don't want to appeal it. Some people have, and then you end up withdrawing it. It wastes the county's time. But more importantly, what could happen is that the county could say, well, you know, you're right, the value should go up. And you go, oh, wait a minute, I didn't realize that. But yes, you in fact could cause them to go up. Now, it doesn't happen that often. It's very rare, but it can happen. So you need to be aware of that. So we go in and we value everything with our computer model. So we don't file it unless we think we can win, or we think that we've got a good case. And we've got all the data to prove our case. And the data is multi-level data. So example, I own a couple of companies. They're technology companies. One is Investway, and one is AppealTaxes-Now. So here's what happens. In Investway, we go and we value everything that comes in the MLS. We run it through our algorithm. And we say, okay, this property's on the market for $80,000, and we think it's worth $100,000. So there's some estimated amount of equity in there. We should go after that, and our clients go after those properties. They can also pull comps on any property within 6 to 12 months of actual sales in that area. So that's what an appraiser would do for a purchase. But on the appeal side, the windows of appeal is a different time era, number one. Number two, they don't always use just sales comps. There's other methods to value properties. And we run in that model, we run about almost 7 models of valuation in there. So we look at it in multiple different ways, and we produce the data to go into the assessor's office and fight those values to get them lower. Okay. So why am I here right now? I'm here right now to talk to you about the process itself. Whether you hire a professional company like ours, or you want to do it yourself, there's a method that you go through, a workflow. And there are some certain questions that most people ask, and I'm going to give you that information. I can't go through it in detail right now, but you will have that information. It's going to be one of your handouts. And in there, in your handout, you're going to have a procedure for appeals of assessment. Okay, this is the workflow through going from all the way from filing it to talking to the assessor, to going to a PTA hearing, to going to IBTR, which is the Indiana Board of Tax Review, all the way going to the state, which you hope you never go there, but if you got a property worth that, and then maybe you will. It's very, very procedural on that. But anyway, so you'll get this in the handout. So I would suggest you look that through. Also being handed out to you is the Property Tax Assessment Appeal Fact Sheet. Okay, both of these are done the DLGF, Department of Local Government and Finance. They put all this together. They're also the ones that certify people like me, tax reps. They certify the assessors as well. For having their level 3 assessor license. So in the fact sheet, it's going to go through, like I talked about, with the time periods and things like this. And it also says, well, do you need an appraisal? Well, you don't have to have an appraisal. Appraisals are good information, and it's hard for them to dispute an appraisal, but appraisals are expensive. You know, you're looking at $300-400 for an appraisal when you could hire somebody like us, and we do it for free up front, and we only charge you if we're successful. So keep that in mind as well. There's a third sheet that if after we finish our talk here, you decide that you want to use us and use a professional to do it, and let us evaluate your property, see which ones we should do and shouldn't do, and get all the paperwork prepped for you and all that. There's a document here saying the next steps, the 5 easy steps or whatever, of going to the website, logging in, using your email address, and if you don't have your password, you can hit forgot password and it will send you one, and immediately you can go in and see the properties that we've identified in this next segment that I'm going to tell you about. So this all started off because of the lobbying group that's going and lobbying for your benefit there at CIREIA. And I was asked to come talk to the lobby group about property taxes. And during that talk, I mentioned that one of the things that we could do to help the club understand what the membership is. Right now it's a membership of people that come. You've got X number of people that come there, but what does that represent when you go and lobby? So what we did was we took all the members' mailing address, matched that with the tax mailing address of all the real estate that's out there. We have the entire tax database for the entire state of Indiana. And so we've matched all that back through, and we've come up with some numbers that are very, very interesting for you to know, being club members, and also for the club itself to know, to understand how it can help better serve its members. So in those numbers, I won't go into all of the minute details right now, and we're going to have some more reporting next month or the month after, depending on how many of you come on and give us the additional information we need to give this reporting. But we did a preliminary count based on mailing address alone, and we found that roughly 970 properties are owned by members of CIREIA. Okay, and out of that puts you at a $94 million tax value of all of the conglomerated tax values put together, and that's about at a 2% cap. Okay, at a 2% cap, that's about $1.9 million worth of property taxes being paid annually from the club. So as, again, the lobbying group goes down, they can say they've got this many members and this much real estate in the state of Indiana. And just so you know, this was not just Marion County. This was statewide that members of CIREIA own. And if you see the map behind me right now, I'll display, then you'll kind of get an idea of where these lay out. The red pins are membership addresses where you live, and the blue pins are where all the property is. And you can see it scatters the state of Indiana. So next meeting, we may go into more details of the numbers that we found, and it depends on what CIREIA wants to do and go into for time-wise, but just know that we've got a lot of information, a lot of data to help you through the appeal process if you want us to do it. Of course, there's other reps out there. I don't think that there's one rep in the state of Indiana has the type of information that we have at our fingertips like we do. But you could come to us. We will help you through the process and just go through the paperwork here. And hopefully Vicki will email us out to members too that weren't able to attend, and they can also understand kind of what's going on with their properties. Thank you, and have a great evening.